Ladies and gentlemen, good day and welcome to the Q1 FY23 earnings call of NCC Limited, hosted by DAM Capital Advisors. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Mohit Kumar from DAM Capital Advisors Limited. Thank you, and over to you, sir.
Thank you, Aman. On behalf of DAM Capital, we welcome you all to the NCC Q1 FY23 earnings call. From management today, we have with us Shri Krishna Rao, Executive Vice President, Finance and Accounts, Shri P.V. Vijay Kumar, Vice President, Finance, Shri Neeraj Sharma, Head Strategy and Investor Relations, and Shri K. Durga Prasad, General Manager, Finance. Without much delay, I'll hand over the call to the management for their opening remarks, which will be followed by Q&A session. Over to you, sir.
Good afternoon, everyone. Welcome to NCC Q1 FY23 earnings investor call. I thank each one of you for taking time to attend this. I hope I am audible properly. Before we start, I will just spell out a small disclaimer clause and then we shall go into the subject. The statements made here or in the presentations uploaded by the company are to our best of knowledge true, and any forward-looking statements are subject to certain factors beyond control of the company officials and management, and hence the audience are advised to use their discretion in their own analysis accordingly. Now, we shall go into taking the performance of the company for this Q1 into account. I will briefly start with the opening remarks followed by Q&A. I have my colleagues CFO Krishna Rao Garu, GM Durga Prasad Garu, and Neeraj, the Head Strategy and Investor Relations, present in the call, who may take your questions eventually. Considering the time limitation, we request the audience to limit to 1 or 2 questions per person. Okay. We'll come into the main subject now. Our economy has shown its dexterity in passing through tough challenges in the last 2 years. You're all aware of that. As you may recall, NCC, after posting a degrowth of 13% in FY21, it has recently raised back in FY22, posting 37% growth. In many sectors, we see near pre-COVID level of activity. However, while the pandemic is still around, geopolitical tensions are affecting the ambience of our economy. A strong growth momentum pushed the real GDP in Q3 of 21-22 to 106% of pre-pandemic Q3 output of 2019-20. Also, GST collections during April 2022 stood at 1.67 lakh crore, registering a double-digit growth of 20% compared to corresponding period last year, and 46.7% higher than the corresponding pre-pandemic level. India's economy grew 7.5 to 8% in FY22 and is expected to grow 7 to 7.5% in FY23. Future going forward, it seems government is rightly supporting the infrastructure segment, construction segment as well. In the recent budget, you can see the government giving a lot of thrust on infrastructure spending and weighed it as a good option to drive consumption and growth in the economy. The economic survey also observed that gross fixed capital formation exceeded pre-pandemic level on the back of ramped up public expenditure on infrastructure. The government has also emphasized on expanding road network and more emphasis on giving a boost to PM Gati Shakti plan and PM Awas Yojana as well. You may note that NCC's order book comprises of 57% from Buildings Division, 18% from Water and Environment Division, and rest in roads, mines, and electrical, etc. So we are well placed to encash these opportunities. Notwithstanding all this good news, the economy is facing still challenges in terms of high inflation, falling rupee, supply chain disruption, pressure on commodity prices, etc. However, I may mention that NCC is well placed in terms of its contract execution, and we have adequate protection in terms of the contract provisions. Considering all this, NCC is well placed in terms of order book at a level of 40,616 crores. We have started this quarter by bagging 4,456 crores of contract in this quarter. The main order during the quarter bagged is wastewater treatment plant at Malad, Mumbai, which has 3,833 crores of EPC component. Of course, it has a O&M component of 1,854 crores as well. I'll touch upon briefly the financials for the Q1 FY23 now. We have achieved a top line of 2,990 crore with an EBIT of 281 crore and PAT of 120 crore. This means we have recorded a growth rate of 56% in top line and 132% in bottom line. EBITDA levels remained at 9.51% compared to 10.55% in the previous year. Slight dip in EBITDA margins is on account of increased material cost. However, compared to previous quarter, the EBITDA margin is improved by 100 bps, mainly on account of mellowed down increase in material cost in the first quarter. Though the overall financing cost increased from 103 crores in corresponding quarter last year to 108 crores during the Q1 FY23, the revenue has increased by 56% and hence the effect below EBITDA is positive, and hence you can see the PAT margin is also increasing. Our overall debt remained at 1,707 crores as against 1,936 crores at the end of FY22. I may indicate here that 3.63% of revenue remained as a financing cost. So if I can share with you the breakup of financing cost, LC charges stood around 7.05 crores, BG commission stood around 23.11 crores, interest on CC WCDL stood at 30.82 crores, interest on term loan 4.14 crores, interest on mobilization advance stood at 27.21 crores and balance others. I may also share that promoters have brought in 106 crores towards subscription of warrants issued to them. This indicates the conviction of promoters in the business. With the proposed subscription, the promoters holding will stand at 21.11% of total holding. As at the end of the quarter, receivables stood at 2395 crores compared to 2492 crores in the previous quarter. The reduction is mainly on account of improved collection of receivables. The receivable period has come down from 125 days same quarter previous year to 94 days of the quarter ended FY23. This resulted in efficient turnover of working capital cycle. We have drawn 1,487 crores of CCWCDL limits from banks. Compared to previous quarter, this is higher by 522 crores. As you are aware, RBI has also increased the repo rates during the quarter 3 times. We are yet to see any immediate increase in the interest rates so far as much of the loan portion is in WCDL form. Interest coverage ratio for the quarter stands at 2.88 times while it was 2.05 times same quarter previous year. As you are aware, the last quarter we have successfully completed divestment of NCC Vizag Urban, which holds about 98 acres in Vizag. The cash flow out of divestment are expected to accrue this year. About 150 crore during the year and loan repayment of 318 crores in next 2 years' time. If I may touch upon briefly the consolidated financials also, we have registered 3,351 crores of revenue and PAT of 130 crores, which is 61% and 160% higher compared to the same quarter previous year. At consolidated level, basic EPS stands at 2.13 as against 0.82 in the corresponding quarter previous year. Coming to the last part of my briefing, we remain bullish on our economy considering infrastructure spend-driven growth. However, this is challenged by geopolitical tensions, global financial market conditions, international commodity market dynamics, etc., which will drive the trajectory of the economy. Still, we have the threat of pandemic around, looking to the health emergency declared by US and lockdown implemented by China. Our board has mulled over the outlook and has felt it is prudent to watch and wait before we crystallize on the guidance part. Though the immediate guidance is not available at the end of this quarter, maybe I personally feel EBITDA levels more or less should continue, and PAT is likely to be at the improved level as this quarter. And of course, top line, possibly it may hover around 15 to 20% range of growth. However, we still have to crystallize the numbers at the board level, and then we have to furnish these numbers to you guys. With this brief, now I'll hand over to my colleagues, and we are open to questions now. We'll take questions. I request one or two questions per participant. Please consider we are there for next 45 minutes here. Now, and I'll open the forum now to open the questions.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have the first question from the line of Shravan Shah from Dolat Capital. Please go ahead.
Thank you, sir. First of all, congratulations on great set of numbers. Sir, my first question mentions that still we haven't crystallized in terms of the guidance, but still just trying to understand 15 to 20% revenue growth. That do we see that is on the much lower side, and likely we can surpass that number? And on the EBITDA margin front, on the full year basis, can we see a 10% number at least?
See, the exact guidance is not provided by the board yet. But however, looking to the trend, 15-20% is a safe figure to assume in the top line. The EBITDA stood at 9.5% this quarter, and as you have rightly assumed, possibly it has a basis. We may continue at the same levels to 10% or something like that. And with the improved turnover, the PAT margins also are likely to improve. We are at now 5.28%, 4.01%. This may also hover around 4.5%.
Okay. And other question is in terms of the order inflow, so including the recent one, the July one, so around I think 6,100 crore order is already there. So for the full year, last time we were said that around 15,000 crore kind of an inflow are we looking at. So what's the update on that? And I need a couple of data points, particularly on the balance sheet side. So what's the standalone gross debt and the unbilled revenue and the subsidiary order book in the Concall order book number that we have given?
Okay. See, as far as the order book is concerned, now it is a net figure what we have given to you, 4,000 odd crores. And of course, I have explained it briefly in my initial introduction. There is a O&M component of, that is a majority component, 1,854 crores. And this trend is likely to continue. We are, compared to last year, it was much higher than the order book position, what we have bagged in the last year. Now, coming to your other questions, your gross debt position, right?
Yeah. So gross debt, unbilled revenue, and subsidiary order book. So that was around 3,058 crore as on March. So what's the number as on June?
Yeah. Yeah. With regard to the orders of the subsidiary companies, we have executed during the quarter 265 crores turnover, and now at the end of the quarter it stands at 2,778 crores. There may be a possibility of 1,000 or so to get a order to this by end of the financial year.
Okay.
With regard to unbilled revenue, we have at around 2,800 crores unbilled revenue, and unbilled revenue is the more we execute the number of projects, the unbilled revenue is going to increase further, and more particularly this is two reasons. One is that with regard to the UP projects where the billing pattern has been changed. For every village gram panchayat, we need to submit a separate bill. That is why it is going to go up, number one. With regard to the other projects, it is a stage-wise billing. Thereby, we need to wait for the completion of the stages and put up. These are all that with regard to the unbilled revenue. And coming to the debt movement, debt stands at the beginning of the financial year is 1,184 crores, and we have taken, because of 56% more in revenue growth, we have drawn around 547 crores working capital, and we too have repaid machinery and other loans to the tune of 24 crores. So net debt stands at the end of the quarter is 1,707 crores. That is with regard to the standalone. And the consolidated level, there is a reduction in urban to the tune of 33 crores. So with regard to the consolidated debt at the end of the quarter stands at 1,753 crores. So the reduction in the quarter by 450 crores.
Okay. Thank you and all the best, sir.
Thank you.
Thank you. The next question is on the line of Vibhor Singhal from Phillip Capital. Please go ahead.
Yeah, good morning, sir. Thanks for taking my question. Sir, just continuing on the debt part. So now that we have reached a debt of around 1,700 crores level, up more than 500 crores from the last quarter ending of 1,200 crores approximately. How do you see this debt proceed through the year? What are we looking at to as the year-ending debt figure for us?
You see, if you have observed during this quarter and last quarter also, the debt has substantially come down. That is mainly on account of the faster, efficient turnover of the working capital cycle. We are less dependent on the debt. Going forward, the same trend will continue. We are at this level. We will continue to have the same level. However, we are optimistic that there can be a slight reduction also.
So you are expecting that could be at 1,700 crore level at the end of the year, but maybe there is some reduction.
See, there could be a reduction because we are not providing you the exact guidance in terms of revenues and profitability. I will not be able to exactly comment upon what would be the debt level too. So going by the general expectation of 15-20% growth in the operations and reduced operating cycle, there could be possibly a reduction.
Got it, sir. Got it. And sir, from the Vizag land deal, how much cash have we received till now, and how much cash are we expecting in this year?
Yeah. This is as of 31st March 2022, we have received 47.5 crores. And as per the shareholders agreement, The second tranche is due in September 22, that is 52.25, and December the same amount, third tranche, and the last and fourth tranche is by March 23. 152.5 crore is expected to realize in this financial year.
Okay. So the announcement that we had made at the time of the land deal, those milestones remain the same. September, December, and March, each of the three dates, we should receive around 50 crores in this year.
Correct. And with regard to that is with regard to the equity, and there is a loan component to the tune of as of March 310 crores. As per the agreement, we are expected to get realization in 2 years, that is on or before March 2024, with 10% monthly compound interest.
Got it. Okay, sure. And in 2 years, that will be repaid.
Sure. Yeah.
Fair enough. Got it, sir. Also, sir, if I could just get the order book breakup, if possible, in terms of different segments.
You wish to have a division-wise?
Yes, sir. Division-wise, the breakup of the 40,000 crores order book that we have.
Yeah. Building division, 25,302 crores, stands at 62%. Roads, 908 crores, 2%. Water and railway, 6,565 crores at 16%. Electrical, 2,641 crores, 7%. And irrigation, 1,070, 3%. Mining, 3,888 crores, 10%. All others put together, 250 crores at 1%. This totaling to 40,616 crores at the end of.
Got it. Sure, sir. So just one last question from my side. Sir, we were very optimistic about the bullet train project between Mumbai and Ahmedabad earlier, but almost all the packages in Gujarat were, of course, taken up by one of the larger companies. Now that the land acquisition process has started in the state of Maharashtra, are we looking to bid for those projects, and are we hopeful of winning any contract on that project?
Yeah. See, this is Neeraj Sharma.
Sure, sir.
You have rightly summed up, the development of the past. But going forward, we are quite hopeful. But our considered view on this subject is it will take a lot of time for the project to come up for bidding. But as and when the project comes up for bidding, we would be very much interested to put our bid on the table.
So there is one bid for the underground station at BKC. Are we looking to bid for that?
No, that one and maybe the C3 package. The package that is going to come up in the state of Maharashtra, there is a big bid due, and we will also consider that tunnel part. This road, this track needs to go underground from the Mumbai.
Underground, right.
So, we will definitely look at that project too, and as and when this comes for bidding, and we'll see. So there are a couple of packages still that is expected to come up for bidding in about, let us say, about 6 to 12 months' time.
Got it, sir. Thank you, sir. Thank you so much for taking my questions, and wish you all the best.
Thank you. Our next question is from the line of Nikhil Abhyankar from DAM Capital. Please go ahead.
Thank you, sir, and congrats on a very good set of numbers. I just wanted to know, our group exposure to the company is to the tune of around 13 billion. How do you see this number by the end of the fiscal year? And is there any reduction possible in it?
Yeah, the total exposure to the group stands at 1,302 crores, end of March 2022, which has substantially come down from, I'm sorry. One second, just hold on. You're talking about exposure to the group companies, right?
Yeah.
Okay. Exposure to the group companies as at the end of June 30th, 2022
is 947 crores. We are confident that we will be able to maybe get another 100 crores reduction during FY22-23.
And also, you mentioned earlier that you are not giving any revenue guidance, but going by the current run rate, very substantially.
Background disturbance. We can't hear you
Voice is
clearly.
not clear, please. There is a
Out and use the handset.
Can you hear me now?
Could you please repeat your question? We couldn't hear you.
Yes, sir. I just wanted to ask, earlier you have already said that you are not giving any revenue guidance as of now, but I wanted to know, quarter on quarter our margins have improved by 100 basis points and certain commodity prices have also come down. So do you see any substantial increase in the margin going forward?
Yeah, this is a very likelihood scenario. That's what I just briefed in the introduction. Because the commodity prices are mellowing down and subject to notwithstanding all these global factors, possibly we may see an increase another 50 bips or something like that.
Okay, so somewhere around 10% we can estimate.
We are yet to get a concrete guidance from the board.
When can we expect that, sir? Next quarter?
Let us see. Our board is seriously looking at various options, how to give you the right guidance, which is very realistic to all the investors. So we hope so.
Okay, and just one last question, sir. We had seen some very positive news coming from the receivables front from Andhra Pradesh government in the last 2 quarters. So, what is the recovery in this quarter, and where do you see in this fiscal?
Yeah, this quarter from Andhra Pradesh, we have received 117 crores, and in July alone, we have also received 44 crores. With regard to the AP TIDCO, the works are continuing, and we are getting realized not only the outstanding unbilled revenues also.
And what can be the total this thing? What can be the total recovery?
Depends upon the balance works to be completed. We can, in this financial year, we may expect around 300 crores out of the old projects.
300 from the old projects.
Yeah.
Okay. Thanks a lot. That's all.
However, we are, how the movement happens in AP government. So it depends on that.
Okay. Okay. Understood. Thank you.
Thank you. Our next question is on the line of Ashish Shah from Centrum Broking. Please go ahead.
Yeah, good afternoon. Thank you for the opportunity. Sir, just coming back to the AP exposure, if you can just leave us with a number that is outstanding exposure as of June 22.
Yeah. As of end of the June, we have that the net receivables 496 crores and retention money 238 crores.
Right. So is there any other component, or these two are the only outstanding components?
Only these two, nothing else.
All right. Right, sir. Right. Also, in terms of our outlook for inflows, what is the kind of number that we might target this year? And especially where are you seeing the opportunities? Are you seeing more in the water side, or we can expect something more on the building side? So if you can just directionally guide us from where should we expect the inflow for this year?
See, as you are aware about this, water projects, Jal Jeevan Mission, we are seeing a lot of, bidding activity in this sector, as well as there are a lot of opportunities in buildings as well as roads. There are projects that is coming up for bidding in distribution sector as well. So and of course, not to forget about the metro sector. So we are targeting opportunities in these 5-6 sectors in a very, very planned manner. And as and when the projects come up for bidding, we definitely do a proper evaluation of the project. We try to look at the client, we try to look at the funding pattern, we try to look at the location, we try to look at the competition, then accordingly we decide whether to bid or not.
Right. Sir, sorry to push you on this, but is there any number you have in mind for the inflow for the financial year?
My colleague has already answered this question in great detail earlier, that we do not have a guidance as we speak. So as and when we will have a number, we will definitely share that with you. But as we speak, we do not have a number to talk about at this moment.
Right. Thank you. Thank you for your answers.
Thanks.
Thank you. Our next question is from the line of Deepak Podar from Sapphire Capital. Please go ahead.
Yeah, thank you very much, sir, for the opportunity. Sir, I just wanted to understand more on the revenue front. Now FY22 itself was a low base because of the first quarter, right? The second wave. So that's the reason we grew about 55-56% this quarter. Now, ideally, a 15-20% kind of a revenue growth looks conservative, given, even if we kind of do not grow in the remaining 9 months on a YOY basis, we will still be able to achieve 20% growth, right? So just wanted to understand, do you think that's a little conservative, the numbers that we have talked about?
Your instinct could be right. You see the run rate, quarterly run rate, if you see, we are there at around 3,000 this quarter. And possibly, generally going by the trend, the last 2 quarters, you will see much higher activity in the construction, which is a general to any company in the construction sector. So I'm just giving you a hint, like this same run rate continues, the 15-20% is a quite achievable number. Of course, as I said, we'll share with you in case when we have exact number on this.
Okay, I understood. Yep, all the very best, sir. Thank you.
Thank you.
Thank you. Our next question is from the line of Rohit from Antique. Please go ahead.
Thank you for this opportunity. So I just missed out on the order backlog from water segment. What exactly is that outstanding order backlog looking like?
Water outstanding order. Water.
6,565 crores at the end of the quarter.
And if I recollect it correctly, this was like 8,000 crore in the last quarter beginning, which means roughly 2,000 crore is the execution.
No. 7,192 crores was at the beginning of the quarter.
Oh, okay.
And 660 crores was the execution.
Oh, okay. So, if I understand it correctly, this has to be executed in a very short span of time, right? So this means this number should largely be exhausted by the end of the year. Is that a fair assumption?
Not necessarily. You see, Jal Jeevan Mission focuses on the last mile connectivity to the households. Now, for each of the location, the survey needs to be done, the approvals need to be obtained. So there is a feasibility is also supposed to be worked out. So there are various number of parcels of talukas, mandals, and all that. So that way it is not
as expected, the pace cannot be as expected, but this is how it goes.
Okay, but is there any closure date that you have in this point? I mean, what exactly this project would probably spill over next year as well? Is that what you're trying to say?
You see, the exact completion date, as I said, these are the factors which will determine the completion date. So possibly you may look at in the next span of it may spill over next 2 to 3 years or something like that.
The next 2 to 3 years, you need to say.
Possibly, but that is subject to each mandal, each taluk, how it is happening, the kind of progress the state government is showing. So subject to that. Otherwise, ideally we can talk about that.
Yeah. And in the building and housing segment execution, there are no slow-moving orders or something like that, which spends more than 2 years of execution cycle, right?
No, these varies. No, each order they have that as per the contract agreement, 2 years to 5 years. It varies, depends upon and as per the contract agreements and the availability of the clearance from the client. It continues and we are executing as per the contract agreements.
True. Sir, coming back to this water project, you highlighted that there are a lot of opportunities. Can you quantify any number, addressable opportunity that you have in mind?
See, at this stage, it is quite complex to answer that. We are working in detail. With the board approval, we should be able to share with you in due course. But however, that's right now not on the table.
Thank you, sir. Thank you. That's it from my side.
Thank you. Our next question is from the line of Meet Parekh from Anand Rathi. Please go ahead.
Yeah. Thank you for the opportunity, sir. So I just wanted to ask, what is the cash position at the end of the quarter? Sorry?
Just a minute. One moment, please. 552 crore.
Cash and bank balance is 552 crore.
Okay, sir. Then, sir, you mentioned that the related party transaction has come down from 1,300 crores to around 900 crores. So can you give a breakup on how this has come down around 400 crores?
We have been mentioning that we were able to disinvest NCC Vizag Urban, where there is an equity of 50 crores and a debt to the tune of 300 crores, so that is the 350 is the reduction.
Okay. And so lastly, on the press release which you have put out with the results, it says around 4,000 crore worth of orders have been announced during the quarter. But according to the announcements on the BSE, the orders have been quite high. They have been around to the tune of 6,000 crores. So any mismatch on the order inflow?
I will answer that question. The reason is you are also taking into account the orders which are announced last month, that is in July. So if you discount that, we are talking only about the first quarter, right? From April to June.
Yes.
Then that number matches. We have announced few orders.
And I have indicated to you in my initial briefing, the major component is 1,850 crore, 54 crores of O&M component.
Okay.
So that is not considered because that needs to be implemented over a period of like 15 years or something like that. So that is not factored in when we talk about the order book position.
Okay. Thank you, sir. That was all from my side.
Thank you. Our next question is from the line of Saket Kapoor from Kapoor and Company. Please go ahead.
Yeah, Namaskar, sir. Thank you for this opportunity. And sir, firstly, commendable job done by the team for very improved set of numbers. Sir, firstly, would like to understand some more color on the numbers, whether the factors which enabled you to set up improved margins, are these sustainable numbers, sir? If you could show some more on the continuity of these numbers, sir, sustainability of the numbers.
Your question is not clear. Can you please repeat it?
Yes, sir. I was looking of the sustainability of these margins, sir. This quarter, I think so we have posted one of the best PBT numbers on a console level. So are these numbers sustainable going forward? Have we put the ship in order that these numbers can be looked forward, the margins which we have posted for this quarter?
See, one critical factor that would determine the margin would be the commodity prices. But however, if you see in the recent trend, there is a mellowing down in the overall commodity prices. So hopefully, I think looking to the macroeconomic conditions like downward trends in the China and US economy, I think this should continue. So based on that, we are optimistic that the EBITDA margins would continue. Possibly there is a kind of improvement too.
Okay. So when we look at these two line items, firstly the subcontract work bills and the finance cost, these as a percentage of sales, and how do these two line items should shape up, especially the subcontractor work bills. So when we look at your March numbers, we posted a turnover of 3478 crores, 3478 crores, and the subcontractor work bills were at to the tune of 1448 crores. Whereas on a top line of 3300 or 3321, we have a subcontractor reduction of 200 when the top line has gone down by 150. So would like to understand how this line item of subcontractor work bills pay on the turnover pie, sir.
Say the subcontracting varies project to project, number one, division to division, and again that from the stage to stage. So absolutely it is not practicable and possible to compare with the turnover and the subcontractor expenditure of one quarter and one division with that of the next quarter. So it varies.
So as a percentage, what should we look, sir? Yes, sir. Please.
If I may add some color to the answers given by my colleague, it depends on the project mix, in this particular quarter. There are things that we prefer to subcontract. Let us say that we are planning to start a project. So before we start the project, this land development, I'm just giving you an example, or the boundary wall. So we prefer to subcontract. So when we are talking about a quarter number, this depends on the what project mix we are really looking at, the project at what stage of the execution, then accordingly these numbers change.
Right, sir. So as a percentage, what should we look as the subcontractor bill segment as a percent of top line?
See, it would not be possible to give a number, but I can share my experience with you. Maybe you can look at the last 3 years number and take a weighted average. So that will give you some number to work out your PBT kind of, calculation.
Okay. Now coming to the finance cost part. Please, sir.
One request here. We are about to close this. We will really appreciate.
Yes, sir. Can I put forward just two small points and then can you close, sir? Only two points. Firstly, on the finance cost part, sir. What have been our blended cost of funds, and what percentage of sales should we look at as the finance cost line item?
Yeah.
The average financing cost, average rate, if you talk about, it is 8.67%, and as a percentage of revenue, it is 3.63%. All right.
Hello.
Thank you, sir.
Yeah.
We will move to our next question from the line of Nikhil Kanodia from HDFC.
Please do not repeat the question, and please confine that. We are going to conclude now.
Sure, sir.
Okay. Am I audible?
Yes.
Yeah.
Yeah. Thank you for the opportunity. So I just wanted an update. What is the update on the arbitration on the SAM Corporation and Taka India?
About the Semcor part first, the counter arguments are expected to start on 15th of this month, and we are hopeful that by end of this financial year we will have some clarity.
Okay.
On the Taka part as well, there are 2-3 parts of the litigation, and all of them are at different stages. It will take a while, to get some clarity. Incidentally, we got a award in our favor about 9 crore from this Madras High Court recently, but we believe that has been subsequently challenged. So it will take a while. It is very difficult to talk about a timeline. You know how this whole judicial process works. It will take a while.
Okay, sir. Understood. And so in case of AP, you have mentioned about the revenues that you would have booked in Q1. As on the at the end of the quarter, what is the outstanding order backlog, sir?
From AP?
Yes, from AP.
No,
he's asking AP.
Is it the overall backlog or is it particular to any AP?
Sir, particular for AP.
Yeah. AP, old and new all together is 3,279 crores orders at the end of the quarter.
Okay, sir. Understood. And sir, in case of this sewerage project, what is there any impact of the change in the government?
Where?
In case of sewerage project in Mumbai.
Yeah, let me answer that question. As per the evidence available on the table, we have no reason to believe that there is going to be any change whatsoever in the project. We are deeply engaged with the client. As you are aware that project of this magnitude and this complexity takes a lot of time to get finalized. So we are deeply engaged with the client. We are in the process of signing the contract.
Okay. So the LOA hasn't come yet, yes? Correct?
Hello?
Yeah.
We'll take one question. Last one question, please.
Sure, sir. Thank you. We'll move to our next question from Parvez Qazi from Edelweiss.
Yeah, hi. Good afternoon, sir, and thanks for taking my question. So just 2 questions from my side. Was there any revenue contribution from our international project this quarter?
Only 3 crores. This is a project at the closer stage.
Okay. And secondly, what was the capex that we have done this quarter?
57 crores.
Thank you. Ladies and gentlemen.
So thank you so much. We conclude the call now.
Yes.
I thank each one of you for participating in the call, and we are available for any of your queries. You can send us a mail. You have our contacts and all that. So I once again thank each one of you for taking time and participating in this call. So we'll see you next. Thank you so much.
Thank you very much.
Thank you.
Thank you. Thanks.
Thank you. Ladies and gentlemen, on behalf of DAM Capital Advisors Limited, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines.
Thank you, Mohit.
Thank you, sir.
Thank you very much.